If you want the truth about how to build real, live, sustainable, long-term wealth through real estate investments, you're in the right place. If you're trying to flip properties or get rich quick or make money overnight or to buy real estate courses, you're in the wrong place. This is the No Bull Real Estate Investment Guide. I'm going to give you real, simple, step-by-step rules for real people who have made real money investing in real estate. I'm not going to be talking about theories. I'm not going to be talking about other things. I'm going to be talking about facts, about what you need to know, about what you need to look for, and about what you need to stay away from. If this is your first time here, welcome aboard. My name is Jerry Pinkas. I've personally been investing in real estate here for the last 26 years in multiple states. Homes, condos, land, rental properties. But here in South Carolina, my real estate team has helped thousands of people buy and sell real estate. But no matter where you are in the nation, the same rules apply, okay? The reason that I'm doing these videos is because every single week I see many people making big mistakes, and I really want you to avoid these pitfalls that are costly. So I just want to say thank you for listening. And give me a thumbs up if you're ready. Okay, so long-term wealth is made by actually owning property as an investment, getting the rental income, which then helps you pay down your mortgage, and it leverages you all the while you're making a little profit. So this can all be done while you're still working your day job. And you've created a second stream of income that's working for you, okay? So picture yourself in the future. Down the road, when these properties are paid for and all that rental income flows directly to you. See, it's a nice comfortable hat and it probably fits you pretty good too. So there's common everyday millionaires who are walking around, you just don't look at them and they've got dollar bills hanging from them, that have made their money in real estate or have kept their money invested in real estate probably more than any other real estate industry, excuse me. So how do you get started? Number one, first thing you need to do is skin in the game. We're not talking about wholesaling properties. We're not talking about flipping properties. We're not talking about controlling interests. We're talking about actually owning the property, okay? And in order to accelerate, you must have solid credit and you have to continue to work to build your credit score. So tip number one, we're going to go through this step by step, is leverage, the rule of leverage, something that continues to work for you directly, okay? So the question is this: if you were buying $100,000 worth of stocks, how much money would you have to put down in order to purchase $100,000 in stocks? 100,000, right? So you got to have the money to do it. So I'm not going to get deep into that, but I'm not talking about margins. I'm not talking about short selling here. I'm talking about, I'm not talking about Bitcoin or tulip bulbs or crypto or, that's speculation, guys. What I'm talking about is real, tangible, physical assets here, like property, equipment, buildings, that kind of thing, like real estate. Okay, so the question is, if you're buying $100,000 worth of real estate, how much money do you need to put down in order to purchase a $100,000 property? 10%, 20%, 25% down. You can control a $100,000 asset with less money than the full price. That's leverage. That's the leverage I'm talking about, all right? That's the leverage that has helped more average people get ahead in life. And the average person can take advantage of this situation, right? So in order to take full advantage of that, of the leverage, you must have good credit. So number two, the rule of credit, okay? The more solid credit you have, the less risk you are to a bank or whoever's loaning you the money. The lower your interest rate will also be, right? The more risk you have, the higher your rate, the more risk it is to somebody else. So they're going to get more in there. But now look at this. It can be a huge difference when we're talking about credit between you putting additional money into your pocket or money going out of your pocket, okay? So over the long term, It can add up to a lot of money flowing your way. This is why credit is important. If your credit isn't the best right now, the first thing you need to do after watching this video all the way to the end, because there's a lot of good tips in here, is to get to work on cleaning up your credit, okay? So get that credit score up. Why? You want to pay down those debts. You want to work on that every day until you want a solid credit score, okay? So number 3 is save and be cost effective. Now, I'm talking about living beneath your means here, okay? I just want you to hear me out. If you spend what you've got on stuff, think about what you buy before you buy. Now, here's why. Think about all the things that you have bought in the last 3 years that are worth less than when you bought them. Think about that, okay? So I'm going to give you some examples here. At one time, I was in the furniture industry. That was my day job, right? So I was selling wholesale furniture, but my peers in this industry were driving around in Jaguars and BMWs and stuff like that. What was I doing? I'm driving around in a Toyota Corolla. Now, my peers were not mean to me, but, they would kind of like, what's this guy driving around in a Corolla, So I wasn't offended because I never told them what I was doing. I was investing in real estate. Buying one here, buying one there. I was getting multiple streams of income. I was living beneath my means, right? So when I quit my day job to move to the beach, their jaw dropped, right? Because they couldn't believe it. They continued to work at a job. They may have hated it, and they didn't have the same options or freedom, okay? So that's what I'm talking about, is the options and the freedom. I got some news for you, because you're not going to be able to get that money together quick enough in order to get started accumulating real sustainable wealth, okay? Setting yourself up for failure if you think you can buy properties with no money down, no credit, or owner financing. That's total bull, okay? So in my 36 years of investing, I've only seen people making money at no money down, no money a month, no credit, owner financing. The only person making money at that was the person who sold that course, that real estate course. Okay, it's true. I've seen many crumble, okay, who tried to do that and were taking that, and they were over leveraged. Okay, so everything fell apart for them. So being over leveraged with no skin in the game is truly a recipe for disaster. You'll get a temporary success, and usually they're the ones who end up losing everything. They're the ones you hear about, right? So I tend to tell it like it is, because it is what it is. But think about it. Pretending to be rich is temporary. It doesn't last, right? No one can ever really become wealthy by pretending to be rich. There are many individuals that I personally know who look like they can't rub two nickels together, okay? But, they have some amazing real estate holdings, and they also have cash flow, okay? Cash flow. So another thing that I see many long-term real estate investors, the common thread that I see over and over again, they all seem to have one thing in common, and that's the freedom, right? That's the freedom to do what they want whenever they want. If they want to fly to Vegas and watch a show, or hang out at the beach, or go to a 5-star restaurant with their family and friends, they just do it. It's freedom. And I want that to be you down the road. Guys, if you're enjoying this video so far, be sure to click subscribe. I just want to say thank you. Okay, so here's another tip. If you don't read books, this is one book that you might want to read. An excellent book to read is The Millionaire Next Door. Now, these are actual stories and habits from true self-made millionaires. Okay, so let's move on with our rules set here. Number 4, remember the golden rule, okay? The golden rule is the one with the gold gets to make the rules, okay? So look at it from the bank standpoint, look at it from a lot of other things, right? To get started, though, you need to save your money, and it's going to take you a little bit longer to get here if you can't save. So think about how do you do that? How do you get your big goal in front of you, okay? Put it out there on a wall or something like that. Let it motivate you. Watch videos. Do what you can to keep yourself in the game. It's just like a diet or a workout, right? A lot of people start, but it's really the discipline. And if you don't pay the price, for example, people say, oh, you got to pay the price for good health, or you got to pay the price for financial independence. No, you pay the price for poor health or pay the price for lack of income, okay? To enjoy the price of good health or enjoy the cash flow, that's what we're talking about here. So number 5, the secret sauce is the trifecta on putting a solid deal together, okay? The secret sauce, trifecta. You got to have 3 things. A, you're going to have to put between 5 and 25% down. B, you're going to have steady, consistent income. You're going to have to be on the job. You can't be skipping around. And you got to be proving yourself that you're consistent. That's the person who's loaning you the money who wants to see this, right? And C, you're going to have a good credit score. So with rates as low as they are, I want you to think about this. Banks aren't making big money on your low interest rate that you're paying, right? So over the next 30 years, they don't want a ton of people with these low rates, because think about it. If rates go up, which they will because they're historically low right now, rates go up and you're still locked in at these low rates. It's over time. This is where you can win. This is why it's a good time, right? But they just want to make sure that you're able to pay and that you're not a risk. So it's not like it was back in the day where everybody could get into a property. Now you got to make sure, they want to make sure that you're really good. You just can't just walk right in, okay? So how do you do this? Number 6, let's see, 5, 6. Number 6, you align yourself with a lender expert, okay? You get a pre-qualification letter. And now why is this? All right, look, I'm going to save you a lot of time and frustration here. And also the deals that you could potentially lose out on because you weren't really prepared. If you do this step before going to look at properties, it's going to save you that time, that pitfalls that are costly. Okay, banks are going to want to see your tax returns, your bank statements, and they're going to run your credit. So it takes a little time to get that together. So here's a pro tip for you. Don't run around town all over the place filling out applications for a bunch of banks, okay? It's going to ding your credit score a little bit, okay? And especially, this is what I'm saying is, let's hear me out, especially if you're inquiring at several banks and you don't put a deal together, like within the next 30 days, okay? Because what you do want to do is to make calls to your local real estate expert or lenders and that sort of thing to see who they recommend. Now, that's why I say go to a real estate expert, because they'll talk to you about who they recommend, which also you can make calls to them and compare not only their rates, but their fees. Okay, so you want to make sure you're doing that. So why do I say to reach out to your local real estate expert? Because they do this every day. They know the lenders, which ones are the best rates, which ones are giving best rates for their clients, and some properties have different criterias. This is the stuff that you don't, or maybe don't know about, but I want to kind of give you this information. When it comes to financing, only certain banks are going to loan on particular types of properties, okay? So an example, when people call into our office here, my team is super excited to talk. They're going to answer questions. My team gives the callers a ton of information. But no matter where you live in the nation, there is someone in your area that knows the market inside and out, okay? So, but what I've found is, it's no matter where you are, it's best to sit next to the smart kid. No matter what state you live in, okay? Really, sit next to the smart kid. There's someone who knows this and does this every day and can give you guidance, okay? They may be able to give you a shortcut, okay, and help you avoid a pitfall. So they may know one lender is better than another, and they've been helping their clients with that. So for an example, here in Myrtle Beach, we have things called a condo-tel. Now, it's a condo that can be rented by the night, by the week, and by the month. Now, just hear me out on this. Traditional banks won't lend on these, and because they won't lend on these, what's really happening is only a handful of local lenders will lend on them, on this type of property. Because, again, why? If you go to a bank and your hometown bank and you say, hey, I want to buy a condo, I want to finance a condo, they say, sure, no problem. I'll give you a pre-approval letter, but seriously, this is already categorized as a condo-tel. These are the deals that fall apart. And if you want a deal to fall apart, there's only a chance of 3% of this thing actually closing and losing the deal. So sit next to the local smart kid, no matter what type of property you're looking for, no matter where you are. They can help you before you go down the road and you're down the wrong path and you're halfway there, okay? Here's another win pro tip, okay? When you do make an offer on, let's say, a $300,000 property, okay, and you're showing a pre-qualification letter, it says you're good for $400,000 because it's a form letter. Just don't do that, all right? Make sure your letter is tailored to match the offer price, the exact offer price that you're making, It's like cards, right? You're playing cards. Don't show the seller your hand, okay? You want to get it at that price. You might be good for more than that, but you want to show exactly what you're available for, all right? Give me a thumbs up. Okay, here's number 7. When you get down to it, you're all excited. Shopping, okay? It's what you want to look for. It's what you want to stay away from. And you can first off shop online. Everybody does that, right? But I'm going to tell you that you must, in person, boots on the ground, do your research, okay? Criteria may be different, but I'm going to give you my personal qualifications to properties, what I look for, okay? And so just about every place that I've ever invested, it was on or near the water. Now, why? Because people are attracted to water, okay? Properties tend to be more valuable on the water, right? More valuable than they are somewhere else. Think about that, okay? So also look at where people are flowing, okay? Flowing, okay? People are moving out of one area. Maybe what's the reason? Is it high taxes? Is it crime? Is it what is it? And look at where people are moving to, okay? Look at the migration. Look at the growth, okay? Because that's where money flows, okay, to those areas. I like to stay away from areas that are obsolete. Why? If it's an obsolete area, usually it's not going to go up, okay? Usually. I prefer areas that are growing. And why? You also want to stay away from crappy properties. Why? Because in my experience, the crappy properties that were crappy properties 10 years ago are probably going to be crappy properties 10 years from now. Look for quality. Why? Because most of the time, the best properties continue to be the best properties, whether the economy's up or down, whatever it is. Those are usually the winners. And there's always a demand for the best of the best, right? To make sure the deal feels right, you really want to smell it. I know this sounds weird, but you want to smell it. You want to be in it. You want to see it. You want to feel it. You want to touch it. You want to go around the surrounding area. Make sure, again, you're doing your research, okay? And I'm not talking about just Google research. I'm talking about everything. Sometimes when you're starting out, you don't know what is a good deal and you don't know when to see it, okay, or what you want to see. So you've been looking for a while. You might miss out on a few. You don't know when to go, and then it's gone the next day, right? So then you might miss a few of those, or you might be looking at properties and you're thinking about making an offer and it's gone. You might miss a few, all right? So, but you got to be ready when it actually happens. Here's an example. I bought my first apartment building. This is in the late 80s, okay? And I had been looking for a while, and I missed a couple really good deals because prices at that time were increasing from where they were, right? But I kept on lowballing, okay? So I lost a couple deals. And then the next deal presented itself, and I was ready, and I jumped in. So look at it at the long-term investment. Don't look at the short-term, okay? Because to get the perfect property, it is worth it. I was paying 13% interest back then. This is the late 80s, guys. So today it's like crazy, right? But, from a long-term approach, a good rental in a growing area that's close to water, that hit my criteria. So again, from the long-term approach. So just remember, it's about getting money. It's not just about getting the money, okay, off. I'm going to get $5,000 off. If you lowball, you might step on a few toes, and I see this happen all the time. You go in with a lowball offer, it's on the market for a couple of days, or you go in, you might step on their toes, and you may not even get a return from the seller. You may not even get a reply, okay, because you kind of tick them off, right? So if you're offering, just think about this, work through this process. If you're offering $5,000 or $10,000 under what the seller is asking for, and it's in a moving market, right? Seller may turn their nose up, right? But look at it this way. If you spend the 6 months looking for a same type of a deal while the prices are all along going up and everything, the perfect property that you really want is gone. Look at the big picture. Take the cost of $5,000 over 30 years, right? It's $14 a month, okay? The cost of one lunch a month, all right? So just look at the big picture. Keep your mind open. Okay, number 8, inspections and appraisals. Okay. If you know what you're doing, you may want to do the inspection yourself. If you don't know what you're doing, get a professional to go through the property. There's a lot of things to look for, but if you're in the property, You may as well turn on the lights off on. You may as well turn the water. You may as well check the air conditioner. Do the research that you can do while you're there, right? And the second thing is the appraisal, okay? So if you make it contingent upon appraisal, because you're financing here, you just want to, it'll have to appraise for that amount. So it's almost like a switch that's going to protect you from paying too much, right? You can get into negotiations beyond that, but I'm not getting into that part in this video. I have other videos out here that do that. But look, if you're looking at it and you found that you need some repairs, trust me on this, guys. If you have a budget for renovations, add to it for a cushion. Add 10, 20% to a cushion. Why? Once you get in, you're bound to find things that are going to need to be done. Just take it from experience, okay? So, okay, number 9. Here's where it hits the road. The rentals, the tenants, and the management. This rubber hits the road on this part. When you look at rentals and management, who's going to do the management? Are you doing the management, or are you having someone do it for you? If you do the management, you've got skin in the game. You're going to have more flow to you. Now, professional management, on some cases, can get you more money, okay? Because they're advertising, they're spending the money to get it out there. They have the experience. They can qualify the tenants. They do a lot of different things. So it's not always about the split, okay? Like, what am I going to pay somebody or whatever it is? Look at the big picture. It's about what will you end up with in your pocket at the end of the day. Now, some people say, I don't want to pay anybody. Well, then you're going to be getting the calls to do these things, right? And if you do pay somebody, maybe you have to pay them more, but you get more, okay? So just look at rent rolls as well. Look at what's going on in the neighborhood. Look at what's going on in the building or the complex or the area, okay? Now, a rental manager, if you're doing this yourself and you're the rental manager, the money all comes in and it goes straight to the bottom line because you don't have the extra person doing it. But you're going to have some skin in the game again because you're going to be the one doing it. So just remember that, okay? Here's number 10, depreciation. Now, I got to preface this because I'm not an accountant. I'm not an attorney. I'm not giving legal advice. So do your own research. Talk with the people who you're going to be working with, okay? Here's the basics. You cannot depreciate land, okay? But the government says real property owners, real estate owners, rental properties, okay, can deduct the purchase price and improvement costs on your tax returns. Okay, this is the big reason why a lot of people do invest in real estate, because it could be a cash on cash basis or it could be the depreciation basis, is where they're actually putting money in their taxes. Okay, so here's the deal. The building value can be depreciated over 27 and a half years. Tax-wise, each year you get a deduction, okay? So the main reason people are investing in real estate, this is another reason, it's not the main reason, but it's another reason, but the government says that at the end of this 27 and a half years, your property is worth zero. And you and I know that the property is not going to be worth zero after that time period. So it's just a matter of, helping you out. But listen, do your own research on that. I'm not an accountant. Talk to your accountant about it, because each person's scenario is going to be different. Okay, depends on where you are. If you continue to listen all the way to the end, guys, I've got a bonus video that's going to pop up for you. Okay, so thank you for listening. So investing in real estate can be fun, okay? But it also can be very frustrating at times, okay? There's a lot of moving parts to real estate. There's like these gears, and they all have to mesh in order for it to move forward. So purchasing, ownership, management, rentals, and even, selling for a profit, okay? Because that's what a lot of people look for as well. But I just want to make sure that you are avoiding the pitfalls that are costly. I have hundreds of super helpful videos here on this channel if you haven't already looked at them. And hey, was this video helpful to you? Okay, let me know. Comment below if it was. And if you enjoyed this video, please go ahead and subscribe and hit the bell. That way you'll get notified when a new one comes out. So wherever you are and whatever you're doing, I hope you're having a fantastic day. And we'll see you in the next video. Take care, guys.